After 2 days of steep declines in the stock market, some of you may be feeling a little bit nervous about what's happening and wondering what to do next. So Tim Maurer is with us. He's here with some advice. He is Director of Personal Finance with BAM Alliance. Welcome back, Tim. Nice to see you.
Thank you very much.
It's great to have you here. For our discussion, let's assume that our investors, have a game plan. How should they react to the 2 days of volatility that we've seen and maybe more to come?
Well, let me say this first. If you're invested in the market and you experience these downturns over the course of the past couple of days, it is absolutely normal and perhaps even natural to feel a sense of anxiety. In fact, we learned from the field of behavioral economics, there's a name for this. It's called the endowment effect. And the bottom line is that what we lose in the market hits us twice as hard as the joy we might feel when we gain from market ups. And so it's perfectly normal for us to feel a sense of anxiety. That doesn't necessarily mean we should be acting on that anxiety, of course, but it's perfectly normal.
But that's the thing, is it's one thing to, nobody likes to see the balance in their portfolio go down. Mm-hmm. But acting on it is the other thing. How do you keep yourself from acting, especially if you fear that there's more to come on the downside?
Well, step one, Bill, is to acknowledge the anxiety. So bringing it from the subconscious to the conscious is a good first step, because then we can move to step two, and that's a willingness to embrace volatility. The truth is that volatility is the reason we have a justifiable reason to expect higher rates of return over time investing in the markets versus just investing in an FDIC-insured CD or savings account. Volatility is a natural part of the market, so when you see that volatility, it's a good sign that you probably should have higher expected rates of return longer term. But that brings us to the third and final step. It's not that inaction is the only course here. If we see enough movement on the upside or the downside, the perfectly responsible thing to do as an investor is to rebalance that portfolio. Like Sue said at the beginning, we're presuming that somebody does have a plan. They do have a portfolio that's designed to grow out into the future. And so if you have that, when you see meaningful deviations based on market volatility, that's the natural time to do the natural market adjustment and buy low and sell high.
All right. On that note, Tim, appreciate it. One of these days we'll have you on when the market's going up. You always help us out.
It sounds like a plan, Sue. Thank you.